Hello and welcome to my Trading 212 Stocks and Shares ISA portfolio update for September 2024. The markets have behaved in a very similar way to August, with a big dip at the start of the month, a quick recovery, but then also further strengthening of the pound against the dollar, which has taken away some of that recovery for us as UK investors. However, I covered that in my Invest Engine portfolio update, so let's not waste any time and jump straight into the Trading 212 update. I've made a number of changes to the portfolio this month and I'm excited to share them. As a quick reminder, I decided to prioritize Trading 212 ISA contributions this tax year over Invest Engine, and that is simply because I qualified for the 1% ISA cashback promotion on all ISA deposits, so it made sense to make the most of that. I've deposited a total of £13,500 into my Trading 212 Stocks and Shares ISA this tax year, and that means I've received £135 in cashback. Alongside my deposits to Invest Engine and to my lifetime ISA on Hargreaves Lansdown, I've now utilised my full 20k tax year allowance. First of all, I'll go through the dividends I've received this month and the positions I've sold. I received 4 dividends in September, totaling £11.37, but the bulk of this came from just one dividend. That was the Games Workshop dividend of £11 that I received on the 16th of September. The other 37p was made up of 8p from Alphabet, 18p from United Health, and 11p from Meta Platforms. You'll notice these are all new stocks to the portfolio, but I'll explain exactly how and why I hold these individual companies shortly. In terms of what I've sold, I actually sold Games Workshop shortly after receiving the dividend for a total of £1,164.90. My total return, including dividends and previous realised profit from the invest account for GAW, therefore works out to be £151.34. So really happy with this stock, and I would have happily held it for longer. Games Workshop is a great high quality UK business. My reason for selling simply came down to the fact that I'm trying to simplify my portfolio, and now was as good a time as any to realise some gains and consolidate my holdings. The other position that I sold was Rightmove for a total of £800.88p and realising a gain of £157.04. However, I did make a small loss on Rightmove when I originally sold it in my invest account, so after taking into account this and the dividends I've received, my total return for Rightmove comes to £130.42, which I'm very happy with. My reason for selling Rightmove is the exact same reason as selling GAW. I'm looking to simplify my ISA portfolio, and when the Rightmove share price jumped on the news of a possible acquisition by the Australian company REA, it was a good opportunity to do so. It looks like I made the right short-term decision because that deal has since fallen through and the share price has fallen a fair bit back down. Rightmove is still a great quality company with incredibly high margins, so my decision to sell is not at all because I no longer believe in the business. Now, turning to the Trading 212 page, before going through the ISA, let's go through my invest account, where much of the excitement has happened this month. Looking at the 1 month chart, you can see a number of contributions totaling £1,200. You can also clearly see a number of new investments along the side here, but I will go through Bloomsbury Publishing first. I've not added to this position and still own roughly 109 shares in the invest account. Looking at the 1 month chart for BMY, it does reveal it is down by 5.6%, but this is nothing I worry about and I'm not planning on selling Bloomsbury anytime soon. Scrolling down, we can see my unrealised return is £136.96 or 22.91%. Okay, now to the new part of the portfolio. If we flick to the pies tab, you can see that I've created a pie called MSCI World Quality Top 10. I have frequently moaned about the lack of a proper MSCI World Quality ETF being available for UK investors, so I thought after recent discussions in my Discord, with my ISA now being full and not particularly wanting to hold ETFs in a general investment account, it would be a good opportunity to experiment a little bit and create this pie. As a very brief summary, the MSCI World Quality Index has significantly outperformed the standard MSCI World, as you can see on the chart on the index fact sheet here. You can also clearly see that since June 30th, 1994, it has delivered an annualized return of 12.03% compared to just 8.48% for MSCI World. That is an incredible difference. Of course, past performance does not guarantee future results, but I do like the idea of the quality factor, focusing on companies with high return on equity, stable year-over-year earnings growth, and low financial leverage. To create this pie, I downloaded the daily updated weightings of the Australian ETF VanEck MSCI International Quality. The Australians are lucky enough to have a proper, non-sector neutral, global quality ETF. This ETF tracks the MSCI World Quality ex-Australia Index, but to be honest, the absence of Australia from the index really does not make much difference to all the weightings at all, so it is close enough for me. Once downloaded, I just divided the weighting given to each of the top 10 stocks by the combined weighting of the top 10 and multiplied it by 100 to get the weighting for each stock in the pie. These weightings I'm showing on screen here are slightly different from from when I did the calculations because as the market moves, these weightings constantly change. I want to make very clear that this is not a precise art and there's only so much you can do with a trading 2-on-2 pie because you can't have decimals in the weightings, they have to be whole numbers, and the set weightings will need to be constantly monitored to ensure they do not deviate too much from the index. So whilst this is an experiment and a bit of fun, it certainly isn't optimal or 100% accurate. That's not the point. Okay, looking at the holdings of the pie, we can see that the top 5 holdings consist of magnificent 7 companies, and they are all currently in the green, with Meta and Nvidia in particular doing the best so far. However, in the bottom half of the pie, it's not looking as good. Eli Lilly and Novo Nordisk, the pharmaceutical giants, are down by a fair bit, and then Visa and United Health are also slightly down. At the bottom, we have the only non-US stock in the pie, ASML, and that is currently slightly in the green. So overall, I am enjoying this pie so far. The big benefit of creating this on trading 2-on-2, of course, is that I can have fractional shares, there's zero commission on trades, and the FX fees are only 0.15%. Trying to create something like this on a traditional broker like Hargreaves Lansdown would be an absolute nightmare. Switching over to the ISA account now, firstly we can see that the return chart is not looking good. However, this is because of me realising those gains from Games Workshop and Rightmove. And unfortunately, Trading 2-on-2's homepage chart only shows profit loss of open positions, and reinvesting those gains also pushes up the invested amount. So it does make the return figure quite far into the negative. It's easy to work out my actual gain so far in this ISA because this is a new ISA and I have deposited £13,500 so far. So as the total here is above that, I am in the green, but definitely not anything impressive, mainly due to that dodgy YouGov stock pick by me. Anyway, moving on to the holdings run through, you'll see that the first stock in the ISA is Bloomsbury Publishing. I still own 150 shares in the ISA, and my return is currently plus £192 or 23.44%. So of course, lower than last month, but no complaints here. Jet2 is the next stock in the portfolio, the well-known travel and leisure company. Over the past month, it's down by 5.08%. My position is currently slightly in the red, down by 1.73% or minus £16.03. The stock went ex-dividend on the 19th of September for 11p per share, and based on my holding of 65 shares, I can expect a payment of £7.15 on the 23rd of October. Next up in the portfolio is JP Morgan Global Growth and Income, ticker JGGI. On the 1-month chart, you can see that big dip early on, similar to what we saw last month. It has recovered though, and ended the month exactly flat. Scrolling down, you can see I've topped up my position using part of the proceeds from the sales of GAW and RMV. I have added 285 shares to now have a total of 1,368 shares. My return for JGGI is slightly in the green at 0.56%, which I do not mind at all, as I have been building up this position quite heavily recently. If we scroll a little bit further down, we can also see that I'll receive my next dividend of 6p per share on the 7th of October 2024. The 285 shares I bought this month were after the ex-dividend date, so they're not eligible for the dividend, but based off my previous holding size, I can expect a chunky payment of £64.98 on the 7th of October. The next holding in the portfolio is the SPDR MSCI USA Small Cap Value Weighted ETF with the ticker USSC. This is up by 2.26% over the past month and is another one which I've topped up. I've purchased an additional 4 shares, which brings my total investment up to 30 shares with an average price of around $62.48. You can really see the impact of the strengthening pound here, as I have a negative FX impact of over minus 4%. However, even with this, I am up by over 5% overall, so I am happy with my decision to add a small cap value ETF to the portfolio. Moving on, my next position is Wise, the fintech company. This stock is down by 4.68% on a 1-month chart, but it has recovered a bit recently after being down significantly more than this earlier in the month. I've purchased an additional 20 shares, bringing my holding up to 300 shares, with an average price of 748.2 pence. Overall, I am down by £230 or 10.25% so far. I do admit this is quite risky having so much in one company, but I am willing to take that risk. I'm not worried by the slight downward movement at the moment. Finally, my last position is YouGov, the stock dragging the whole portfolio down. After it looked like it was having a bit of a recovery last month, it is back down to 437 pence. Scrolling down, we can see my position is 120 shares, so I have slightly topped up by 15 shares to bring my average purchase price down to 775.1 pence. It's going to take a bit of a miracle to even break even on this stock. I'm down by £405 or 43.62%. The full year announcement is on the 29th of October. I'm going to have to peer through my hands when I look at that. Hopefully not too bad. So that was a run through of all my positions, and I'll now calculate my total trading 212 investment return to date due to the homepage chart being a bit useless for total returns. To be clear, this is the sum of the gains from both my invest account and new ISA account. To get an accurate figure, I add together the unrealized gains, realized gains, dividends received, and interest earned. I also take away the investment costs, which are mostly made up of stamp duty paid on the purchase of UK shares and the FX fees charged by Trading 212 when purchasing stocks that trade in a different currency. Adding all the sources of return together and taking away the costs gives me a net investment return of £1,007.05. And by using Excel to calculate my money-weighted rate of return using the XIRR function, which takes into account when money was deposited or withdrawn, I get a return figure of 10.81%. So this has been dragged quite a bit down recently, but of course YouGov is not helping. Here's the spreadsheet. I just list all the dates of the deposits or withdrawals and then the amount in the column next to it. You then add the current date at the bottom and take away the total current value of the portfolio before using the XIRR function to get your internal rate of return. This is annualized, not cumulative. To finish the update, I'll just quickly show you the overall allocation of the portfolio and how it currently stands. You can see that, as intended, JGGI makes up the bulk of the portfolio at around 55%, and then another 11% is in the US small cap ETF. The remainder is in individual stocks, with Wise having the largest weighting. My goal was to reduce my weighting to individual stocks, which I have done in the ISA, but of course the creation of the MSCI World Quality Pie in the Invest account goes against that. However, as I am managing it based on an index, it's not really individual stock picking in the same sense, or perhaps that's just me making excuses. That is it for this video. I'm excited to see what October has in store for us. I do have some good dividends coming in. Let me know how your portfolios have been doing in the comments below, and if you enjoyed the video, please consider leaving a like, and I'll see you in the next one. As always, thank you for watching.